Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, December 5, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, she's still riding the trend line. We've been eyeballing this trend line for several days. She continues to ride the trend line. And even as you go down to an intraday chart, you can see here at 10 o'clock in the morning today, she did touch again the trend line. She did it yesterday in the afternoon. She did it again at 10 o'clock this morning. And then one more attempt in the afternoon coming up short before selling into the end of the day. Should we make a federal case out of this? All we're saying is the trend line is important and she can continue to ride the trend line, and the trend line is rising. It does go from lower left to upper right. Therefore, each and every day that goes by, price is rising relative to the trend line. Therefore, it's not uncommon or out of the ordinary for price to rise in the S&P 500 a la the SPY. One thing we do know for certain that Mrs. Market, does know about this trend line. It's pretty obvious when you look at the daily chart from the 25th of November. She's basically been riding up this trend line. She is in an uptrend. The trend is your friend. She is at new highs, and therefore, at new highs, the trend is certainly your friend. And there's really no material change from yesterday, the day before after that. She's been doing the same thing day in and day out since the 25th of November. Of course, no change also on the weekly chart extended from home base. Just to reiterate, the more market stays extended from home base, the more likely she will be to come back toward home base and work off some of the fictitious overbought condition. When you look at the daily candle of today, you can see from high to low, it was a very narrow ranging day. Therefore, no material change on the chart. So let's go over to inside the numbers and check out what we were discussing early this morning. We put up a chart with the trend line so traders have a point of reference, and we had an early pivot around 606.75. What I urge you to do is pause the video, read the notes, go back to the chart, and double check the work. But you can see once again at 9:07 a.m., before the market opens for business, we're reiterating the pivot is 606.75. That was the top end of a zone. You could say creating a support zone, that's with a lower number, 605.85, a zone between 606.75, 605.85 for a bounce back, as you can see, in the other direction. Here's a 5-minute chart. Right of the vertical line is today's activity. And this is what happened in the morning session. She came up a nickel short. We were discussing it in the live room. That qualified for the give and take. Sometimes they come up short. Other times they spike them through. Wanted to, for whatever Mrs. Market reason was for today, stay above the pivot by a nickel, at least in the morning session. Came in to run another test at the end of the day, 606.75. We had plenty of traders take that ride coming up short. If they were willing to buy in front of the pivot, then they were willing to buy a spike of the pivot and the lower number. We discussed it in real time in the morning session in the live room. Many traders made bank this morning on that trade, catching low of the morning session. Nice job to those traders. As you can see, here's all the commentary from an inside the numbers perspective. It's all in here. Everything traders need from a success standpoint is in here from an SPY, whether it's the ES options on the SPY, exchange traded products, the MES. They're all directional trades. They're all based in the SPY, and the morning commentary is there for the taking. Everything you need to be successful is in here each and every day. Of course, then we have stocks on the move. We had AMAT, SIG, and Sentinel 1 this morning. And then we have our list of support and resistance for the dozen other markets that we cover each and every day. This is the package that you get with inside the numbers. Here's an image of AMAT. The first number on the board today was 176.38. The low of the session in the morning, right out of the chute, not the low of the session, but the low in this first candle was what? 176.38. When you drill it down to a 1-minute chart, you can see what happened in those first 3 minutes of the trading day. Market opened above the number, came into the number, touched the number, and had a rocket ride away from the number. And as you can see in minute number 3, the high was 179.42. We'll call it a $3 rally in 2.5 minutes. That deserves a how you doing? At a bare minimum, it deserves a funny how that works. What's going on over in Camp IWM? Well, the IWM did something today that we've been discussing, and we'll discuss it again right now, which is closed below this gap. The closing print was 238.77, so if we put a line there, you can see very clearly she closed below that number. What we said was closing below that number changes the character of the market. It changes it from a bullish flaggish pattern that we're drawing in now, that we've been drawing in and day out, and the flagpole is on its way up from the lows. You can do it just like this, and you can see clearly that this was a bullish flaggish. Now, it could still be a pullback pattern staying above the 20-period moving average. There's nothing wrong with that from a chart perspective. It just changes the complexity and the character of what the IWM was doing on the daily chart over the last several days in terms of the bullish flaggish pattern, building energy for a move higher. Still in an uptrend, nothing disturbs the uptrend, but changing character a little bit by closing below the gap. That's kind of like a flare up in the air. It's somewhat of a little signal of a little bit of trouble in the air for Camp IWM. We'll certainly be interested to see how she closes tomorrow, the end of the week, the Friday close. What about the folks down at the transportation department? Another bad day for the folks down there, down 190 points, give or take. Guess what? This is my second favorite market leading indicator. The IWM is a number one, but this one is certainly my favorite a number one canary in the coal mine. The transports. The transports have been essentially down 7 days in a row since they made the recent top. Interesting information. 16,717 is in fact an important area for a multitude of reasons. In team transports, you have a breakup candle low, you have a breakout area, and you have a gap just below. That's an important area, including, not to mention, the 50-period moving average just hovering right below. She seems to be headed in that direction. Expect the transports to find general garden variety support around 16,717, give or take just a few points on either side. For example, 16,700 is the same as 16,717, by the way. What about the Q people today? Any material change in the Qs? Not really. They were down a little bit on the day. However, no material change on the chart. They've broken out to new highs, coming back to their most recent breakout area would be and is normal garden variety stuff. She's really nowhere near that area right now. She can pull back a little bit, go sideways, test the gap window or entrance to no man's land. That happens to be the low of 519.60. So there's no material change on the chart. It's just a down day, down $1.45 or about 1/3 in the Q people. That's it. We're not going to make a federal case out of down less than 1/3%. Financials, XLF, same routine, quiet tape today. She was up a little bit, down a little bit, didn't really do much, hovering above the 20-period moving average, no material change. The trend is your friend, and it maintains in the upward direction as long as she's above all the moving averages. It is a strong uptrend. When you take a look at the weekly chart, pulling back toward home base is not out of the ordinary, and it's not uncommon. We just need her from a bullish perspective to hold $50. Below $50, something else starts to develop, and we can have targets on the downside. But above $50, she is in a trend is your friend bullish position, period, full stop. What about the folks down at the Smash Mouth department? Down $4.33 today, 1.7%. Now the SMH, or Philadelphia Semiconductor Index, is definitely a good proxy for the tech space as a whole, down 1.71%. It's a puzzle piece. We'll put it on the table. We'll note it. It's not a floating market. It's not a nothing burger day like some of the other markets we've looked at already. This one is important, and it is a puzzle piece, and we will put it on the table. We will also be interested to see how they close the week in the semi space. The SMH above or below the 20-period moving average will be a telltale sign. She's been riding the 20. The 20 is important. It'll be interesting to see where she closes the week on Friday's close. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.